Hello, everybody. Anybody watching? All right. See, there it did that thing. I don't know why I did that thing. I got to get it to do. It's got me black. I'm blacked out. All right. Well, live via that. All right. Well, welcome to the world of stock market. Anybody here? All right. All right. Let's see what I can do. What can I get away with? Can I get away with murder? Murder. All right, everybody, we're up and running. Welcome to the Russell Journal. I am your host, Russell Liss, and this is a nightly update as to what I got going on, what we got going on. I know that I'm live. Thank you. I'm a live wire. All right. Okay. So, as far as my journey goes, our account is down to a whopping. Oh, I got online. Give me 1 second. I'll tell you in a second. 4, 7, 5, 8, 5. All right, we got $10.98 in the account. I got one put and one call holding for tomorrow. This is called the put call vertical spread. Normally, when you do this, you sell one and buy the other. I did not do that. I bought one put and one call, and we'll see. They're both really, really cheap and really, really out of the money. So either the market's going to rebound hard tomorrow or it's going to crash. Yeah, it's going to crash. So either one of those two things has got to happen in order for me to get paid. Okay. There's not really much logic behind it other than giving it a shot. Got to give it a shot. So, all right, $10.98. That's pretty low as far as my account goes. So I really have to ask myself. I got two basic solutions, two basic things that I can do from here. So believe it or not, in spite of what this performance has been, I am actually a pretty good and pretty competent trader. I have done some really foolish, stupid things and tried some stuff that didn't work, and looking to really pull in some bigger money from some of these trades, and I paid the price for it. Overall, I think I got to go to this side of the screen. It's driving me nuts. Overall, as far as I'm concerned, at this moment, it doesn't matter. From what I would, what I would like to have done, I guess I was going to try and do, see if I could really generate some large capital or large money with, a small amount of money. That hasn't worked for me so far. I have some trading setups and some trading strategies that are a little more grinding. And again, I didn't really plan on getting down this far, and I did some really, really stupid, bad trading type stuff in order to get down here. I know what that stuff is, and I know how to correct it. So I'm going to do that. I'm left with really two questions as to sort of how to proceed with this account. Now, it may seem weird to you, but I could take my roughly $11 and day trade basically slow trade it back up, for a ways. I could try and see how long it would take to go from $10 to $100 in this type of trading. I'm more than capable of doing it. It's all the same stuff. And when I was day trading stocks, it was I wouldn't say it's easy, but I definitely say that it's doable. So now, as far as that goes, it would be kind of cool to document that process and do it. So I've been thinking about that. I don't know that that's exactly the way I want to go. It's not the easiest way to go. But okay. The other thing that I can do is I could hit back to work and grab some cash, through a job or a couple jobs or, some side hustle money and rebolster the account and go back to trading more of a, taking more of a lot more risk averse position to build it up. And so I'm really left with those two choices at this point. And that's kind of where I'm sitting with things. Overall, for either one, what I don't really want to do is, I don't want to go jump back into a kitchen somewhere because that's like a lot of work. A lot of work, and it's going to sort of sideline me for at least 6 months while I do this. So I don't know. We will see. Basically, what we're going to shoot for is, if we don't get super lucky tomorrow or the next day, which we have to get really lucky, and even if we do get lucky, it's really bad luck because it basically means the global economy has to collapse for those puts to become worth any money. And in the event that happens, it's probably not going to make enough money to matter. We'll get my trading account back up, but it's definitely not going to enough to really matter or anything. The other side of it, the other side of it is going to be a slow, unexciting process. It's really, really slow. It's really not exciting. And I have to become really aggressive with myself and with my trading strategies. And that aggression usually spills out into other people because it really, when you learn to do this, I don't know if anybody else is, you guys all got to figure out your own process, but I really have to have a no bullshit, no excuses way of, like, with myself. There's no bullshit, there's no excuses. Like, I become insanely rigid, and I have been very averse to being the rigid guy that I can become in order to achieve the things that I want to achieve. Because I become very hard on the people who are around me. I have this problem where I can't separate my expectations for myself from my expectations of other people. Like, I really struggle when I go into this mode, and it usually forces a lot of relationships away from me. And so, because most people can't handle the no bullshit, Russ. Like, when I do that, and that sounds like braggy and arrogant and some stuff you'd hear from some redneck in a bar somewhere, but it kind of becomes the truth. I'm really not anybody's friend when I do that, because nobody will go as hard as I'll go when I go. And so it's really tough to get going. And then people really don't like it because I don't joke around. There's no jokes anymore. So if I do it that way, that I have to sacrifice a piece of my personality. On the other side of it, I have to sacrifice a massive amount of time, and I have to commit to a bunch of other stuff that gets in the way of my focus, and I worry about losing that focus. So I'm a little all over the place as far as this thing's concerned. In the interim, I don't know, so how I'm going to do it. I'm going to take this weekend to really kind of think about it. and see how it all plays together and what it does. But, that's basically the trading journey so far. As far as I'm looking at the market goes, it does look like it looks like IWM has finally put in its bottom. It's done a double bottom right there at the 191 level. Broke a little bit below that, but we've got a pretty significant double bottom coming into Friday. What I expect though from here, if we don't get some sort of really bad thing that causes us to move down, if we don't get some sort of really bad news, well, the next break lower is possibly like the 179 level. And below that, I'm seeing the 169 level. And below that, I mean, we could go down and retest at 95 if we really get a big economic, but you need somebody to dump something really, really hard in order to get that big of a move down. And that's going to happen over a couple of days. I don't have the capital right now to take advantage of a trade over a couple of days. So, fancy pipe dreams as far as that's concerned. So we'll see what I do, what I can get done. I really thought in this pullback, I was really going to make a lot of money, and I didn't. And that's been a big piece of like big error. We've had this 20% drop, and I knew this was coming for like a long time, but so I thought for sure from the highs, you're down what, $44 plus 10. So you were down $55. So you're down over 20% at your bottom. I really thought I was going to put in a put order and just print money all the way down. Now, the truth of the matter is if I'd have bought puts for February, then I probably would. I'd be rolling deep. I didn't know that I was supposed to do that. And because when you trade, when I day trade in a bull market, the thing I realized when I day trade in a bull market, it's easier. It's far easier to just day trade scalp bounces and things of that nature, because the bull market's going to be up and down, and it's really easy to play the bull side of things. But when you're in a bear market, the selling is a long trend, and you can take advantage of that long trend with a long term, with really a long, what do they call them? They call it a leap. If you take what's called a leap, where you buy contracts like way out, you can really take a lot of advantage of that with the volatility. But you can build up a lot of intrinsic value to your stock or to your options. But I didn't know that. I didn't even think to figure out how to plan that. I don't know how to plan that trade. So I've been working on that a lot lately, looking at it. But now that it looks like we're putting in kind of a bottom here, we're going to look for a nice bounce to come into, and then maybe probably put on one of those leaps for some time further out and see how we do. Now here's the offset. Okay. The market's going to bounce. It's going to go up, but it's not going to go up and make like these higher highs as far as I can tell. With the market of fear, there's no reason to believe that the market should be more valuable than it is. And with the recent correction and with everything coming off of like unrealistically all-time highs, my mind would say there's no reason to drive this market higher. Okay. Now, if we think about what we went through yesterday, and how we were just absolutely surrounded by idiots all day yesterday, and I was too entrenched to do anything, to move anything, and when I did move, it was the wrong move. I think this is what it means to be the straight man surrounded by the three stooges right here. I really dinged myself, and which is fine. I think that there's some experience to this. So I'll tell you, there could be some bit of good news, and the bulls will drive everything way above where it was for no apparent reason. The hard part about this is that in our indexes, they're all trading below, like more than 50% of the stocks in any index are trading below their 50-day moving average. Okay. So you could see money move into the indexes. The problem with that is the underlying stocks that make up those indexes are not going to go up, because somehow we have managed to get a ton of just trash companies on the exchanges. They're garbage. They're not worth anything. They had a lot of hype around them, and they don't make products. They don't make anything, and so you're really looking at a place where there's nothing new. The other thing that we could possibly do is we could go long. We could take call options on stuff like SQQQ or on TQQQ, which is possible. That might be a little bit more. We might have to find something that's a little more affordable to trade. I think QQQ or SQQQ is trading around $41 a share right now. So we'll go in and find out. I'll find out what implied volatility is for SQQQ and TQQQ, and we'll make a plan from there, because I think you can short if you go long on those. So SQQQ shorts the NASDAQ. And if you go long on that, if you bought shares in that, it would be basically giving them money to go short the NASDAQ. So if you buy put contract or calls on that, you're basically shorting the rest of the market. If you buy puts on it, you're going long on the rest of the market. You're going to count on the rest of the market to rise. And if you're doing that, you might as well just go into the rest of the market and go long. You might as well not even bother with SQs or TQs. So I think that's a possibility. I think we're going to try and go short or go long on SQQ and see what we can do there. That seems like I think I just worked out what I'm going to do. We're going to take our $10 and we're going to see if we can't make a decent trade. All right, guys. Well, for the Russell Journal, I'm Russell, and I guess we're supposed to do catchphrases, so pretend I said something. You guys have a good night, and we'll see you tomorrow.